All right. Good morning, everybody. So on your screen is the spot gamma levels. That's the ES and the SPX if you want to capture a screenshot there. Also got SPY here for those of you who maybe want to trade the little one. And for the NASDAQ, that one right there. So there's a couple events that are coming up. The week is nearly over, but we still have a little bit this week. JP Morning earnings is April the 14th. Before the market opens, they're going to kick off bank season and earnings season. It's going to be a really big deal. Next week on Wednesday, we have Tesla earnings. And then next week on Friday, we have the OPEX. In 2 weeks on Wednesday, we've got Facebook. And then we've got Microsoft and Google and Visa working on down the list, right? So it's coming. We're going to start cycling through again. For spot gamma, they mentioned they're expecting some mean reversion forces where price action becomes attracted to nearby large gamma levels. The large gamma levels are right there. They suggest that looking at the options metrics, the market is not giving favorable odds to momentum or direction-oriented trades. So a lot more of this chop and this grind. So we continue to see a weak dollar, or at least the dollar index, which is going to continue to help with, gold up, oil up. But both of those are coming into a resistance. So, with the dollar coming into support, perhaps around that 101 area, we might hit the resistance in, say, USO. So I put a short on yesterday with that. It was more of a neutral. It was a at the money call spread more than actually it was in the money. Think about it. In the money call spread on USO about 35 days out, something like that. So job numbers are going to continue to be a big deal, and we are getting some jobs data today and tomorrow. And then we got Bank of Canada chipping teeth, and the 30-year bond today at 1 o'clock. And I know those aren't really something that anybody else talks about. It seems like I'm the only one ever focused on those additional auctions, but to me, they have a lot of impact on the market. And at the very least, just knowing what time that they're going to come out with that data and giving it a 10 or a 15-minute window on the other side of 1 o'clock, right? So by 1:15, if the market really hasn't flipped and started running in a different direction or responded to that auction, then yeah, hey, cool, you're good to go. Run your 0 day and be good with it. But I can't tell you how many times I've seen the market just turn on a dime within minutes of passing through that hourly candle, and we get a completely different afternoon. So watch the clock. It's free. So we got Bank of England, we got European Central Bank, Bank of Canada. Got a lot of stuff going on today. Earlier in the week, it was our Fed officials that were all over the place, chipping teeth and really failing to unify in a message. I think they did a miserable job. So we still don't have any real guidance. CPI numbers yesterday were inconclusive for market sentiment, as we can see, because we just couldn't get up and go anywhere, right? And in fact, that liquidity gap that I talked about yesterday and showed you an example of is exactly what we got. A nice push to the upside where we set a top and we spent the morning closing that gap. It was a best trade of the day. That gap right there. So the report for CPI came in. We topped out. We spent the rest of the morning getting that gap closed. And by 10:30, we were done. It was closed. All right, so we got Hong Kong here, still inside day. They closed after breaking out to the downside. Nice little rally, closed at the higher end of the day, but still inside day. And now we're just continuing to chop about since March 30. So all of April so far, it's been hurry up and do nothing, go nowhere. The longer it spins sideways here, winding up, the more energy it's going to have. And while energy doesn't imply direction, when it does finally pick a direction and break out, then it should be a really nice follow through. But as that wick shows here, get a candle close on the daily before you consider the direction having been picked. Right. So anybody who tried to short that sucker today thinking, all right, we finally broke the range, let's run that. Well, they got a nice little bear trap and it squeezed them with a push back up. So candle close on the daily can help confirm that breakout. It's still not going to be 100%, right? There's no 100% to anything. Japan, it's an engulfing candle, 100%, right? Marbozu, no wick on either side. I mean, if I zoom in enough, we might see that tiny little wick up there, but use your imagination. So opened gap down, turn and ran, didn't get this gap closed. Had an inside day breakout to the upside and closed at the highest point of the day. And it got into this channel up here with a gap that needs to be filled. So now it has a little bit of support. We'll see if they get it. Europe is still open. It's 12:40 over there right now. And they're looking at an inside day. Their candle yesterday, that upside down hammer, is the same one that we had. And so far, I mean, it's looking pretty good. We've got a real nice tight level here to the downside of this trend line. And if we consider this a really tight wedge, that's a rising wedge. Rising wedges break to the downside. Be watching for market reversal off yesterday's high. It's the last pivot they have to deal with since this gap is already closed. And this gap here is not closed, but it's too far away to be dealt with today. So we'll be looking for a rejection off of yesterday's high. See Europe start to fade, hitting that resistance and recognize what it might do to our market. Eight 30, 10:30, 11, 11:30, and 1 o'clock. So a full house. The good thing is there's really nothing left on the sheet after 11. So by 11:15, you should be good to go for a 0-day trade. Unlike yesterday, where we had to wait until 2 o'clock to get the FOMC nodes. And when those minutes came out, it was such a weak, pathetic market that that was exactly what my post was. What a weak market. Down we go. It couldn't get out of this range. And on the 5-minute, that 2-bar reversal back here was the post that I had made that said, that's it for the hour. That was the 1 o'clock hour. Let's see what we get at 2 o'clock. 2 o'clock, we had really weak flows come in with the FOMC notes, and the market just gave up at that point. The notes really didn't give the market what it was looking for. We could see volume is still light again this morning. We do have PPI on deck, and historically PPI is not the one, right? It's CPI. But the market is really looking for anything that can give it some guidance. They didn't get what they were looking for yesterday with the FOMC minutes and the CPI. So, looking at this volume, it's showing that they're looking today for the PPI to perhaps provide a little bit of insight. But there's no market maker move up here. So they're not hedging or protecting themselves from a big move. And from the way it looks, they're not anticipating a big move. The VVIX is the, to keep it from, get all nerd on you guys this early in the morning, just consider this the VIX implied volatility indicator. If the VIX has a high volatility, then this would reflect that. That's one thing that it stands for, right? Kind of like what we would use it for. But the other one is expectations of a 2 standard deviation move. I know that might sound like a lot, but basically, if investors believe the market can make a really big move, it will be reflected here. We'll see this higher. And if the market doesn't believe we're going to get a big move, then we won't see this bid up, and we'll see it fade off or stay in a range like what we have here. So it's really not reflecting the market sentiment, showing that they're in any way concerned with a big move. And it goes right back to spot gamma that I read at the beginning of this. That spot gamma says the options flow is implying a stagnant market with no direction and no momentum. So we have an MDP right now. It's a missed daily pivot. It's not my strategy. I didn't develop it, and I don't trade it either. But if you learn the strategy, it can teach you how to use the daily pivots for a little bit of insight. Right? It matters for a market that normally hits its daily pivot 80+% of the time. When we don't hit it, it kind of stands out. We're doing the other 20%, especially on a range day when, say the market hasn't done anything. And yet one thing we haven't done is hit that pivot point. We didn't have a narrow IB last night like we had the night before. If you remember CPI Globex, we had a wide, narrow, a long, narrow range until the kill zone at 2 o'clock. We don't have that today. If we were to measure the kill zone, which I have right there, it's not very wide, but we didn't stay in there for very long before we expanded out of it. We didn't get much out of the kill zone, And now we're just continuing to chop about, hugging and holding around the VWAP. Now there's a candle pattern that I don't have a name for yet, but it's VWAP spinner is pretty much the best I've got at the moment. It's this idea that once we get hovering around VWAP, think of VWAP as the center of the basketball court, and price gets these sharp moves to the upside and sharp moves to the downside, and that sets a very strong limit level. A breakout of that will be your play, right? One direction or another. But a lot of times that is what we get. Just these 2, 3, maybe 4 of those in a row where we're just getting these sharp legs down. Think of like rally, base, drop, base, rally, right? RBD and RBR, those are simple yet very effective price analysis setups, right? They're very simple even for newer traders. The kill zone is a I don't know who named it that, by the way. I'm not the one who did it. Is a time frame between 2 and 4 in the morning Eastern time. So all you Canada people or Californians, I don't want to hear it. It's Eastern. During that time frame, you get the biggest moves in the market, statistically speaking. So if you take any 2-hour time period in the market, from think of the open from 9:30 to 11:30, or think of power hour from 2 to 4, there is no other time period in the market that gives you bigger moves than between 2 and 4 in the morning, and it's called the kill zone. Probably should come up with a better name, but since I'm not the one who did the statistics to find it, I guess I shouldn't be the one to name it. 10-day, 30-minute volume profile. We're still in the box, the same box. We haven't done anything. We haven't gone anywhere. Got a whole lot of nothing. And looking at what Spot Gamma has laid out for us, we're going to continue to get a whole lot of nothing. We still have the air pocket of risk to the downside. So if we were to break 4,100, whatever has been holding us up, and I've talked about this now for a couple of days, whatever's down here, it's not liquidity. It's not traders in the ES taking us back up off of those lows. And we can see that, right? It's got this really deep, shallow area. And even when we've come down into this zone, we didn't really print a whole lot of volume down there. So it's not like we hit an iceberg or something. Whatever we're hitting is in another market. And the relationship between this market and that market is we're hitting resistance somewhere or we're hitting support somewhere, and it coincides with SPX 4100 or ES 4100. So we're going to continue to look for the 4100 to be defended. I was just checking to see if the emails are out yet. They're not out yet. All right, not yet. So that's the idea. Look for 4100 to continue to be defended. Otherwise, we got to get out of this box. For swing trades, for anything good, we've got to get out of this box. 5-day, 5-minute volume profile. Call this mapping out the 5x5. We have a new VPOC from yesterday. It's overhead. It's yesterday's point of control. Add the letter V because it's untouched. It's a virgin point of control. And again, I don't name that. It's been around for a long time. We're going to look for that 41.45 to be a resistance point. If we can get above that level, we'll have the expectation of keeping it, unlike yesterday. The thing about yesterday when we got above that level is how fast the moves were, right? It's really hard to slow something down that's moving with such speed. So if we were to shoot through there, with PPI numbers, then I wouldn't expect it to provide any sort of support once we're through it. But if we just grind our way up and get above that VPOC, then yeah, I think we can hold above it. First touch play will be in effect for VPOC today on that upside move. So basically what I'm saying is first touch, the first time we get there and touch it, we're very likely going to reject away from it unless we get there during the PPI. Right. So yesterday when CPI came out, we had this really big candle move. Nothing gets in the way of that candle. There's no pivot point that exists that's going to stop that candle. And the same thing is on the table for today. It really looks like no one's expecting PPI to come in with any kind of shock. And that sets us up for a big shock, because if the numbers are way out of line from the anticipated numbers, we're going to get a big move today because it's going to catch a lot of people off sides. If we had been hearing about the PPI numbers for the last week and there was a lot of hype and everybody was thinking, yeah, we're going to make a big move today, I would be sitting here telling you, yeah, we're probably not going to make a big move today. But it's been silent on this PPI, right? There's really hasn't been any kind of excitement because everybody thinks we've got it dialed in, consensus and analyst estimates. So we'll see. We're now in our second week where we've not even touched the edge of the expected move. Now, I don't have the numbers on this, but generally speaking, we hit the edge, right? We hit the edge, we break out, we come back inside the box, and then statistically we close inside of that range at least 70% of the time, and when we're in a good clean bullish market, 80% of the time we'll close inside that box. To get 1 week where we didn't hit the edge, yeah, hey, no big deal. 2 in a row, now we're starting to get into some probability numbers. If we don't hit the edge this week, we'll certainly be looking to hit the edge next week. How many weeks in a row can they run this thing sideways before it finally builds up enough energy to pop? The market is very much like nature in this regard. You can't contain nature without giving it a release valve. Right? Think of water held at a dam. They still let water out because you can't contain nature and just bottle it up without releasing energy somewhere. Got to let it blow off some steam. Same thing with the market. The more range it is and the longer it's ranged, the more energy it's building up until it's finally going to pop. For the bigger picture, are we done with the bear market, or are we not done with the bear market? There's one thing that can be said about the current chart that we're on. Two really, but we'll start with the main one. This cyan colored line here is an anchored VWAP. It's anchored to the start of the year. And when we're above it, the entire market is basically trading above its average. That's bullish. And when we're below it, the market is trading below its average. It's bearish. And this is not, oh, it's the ES kind of perspective. It's the broader market. That's only one data point, and I wouldn't use it to, go long in my portfolio or something like that, building out, a 5-year plan in my long-term accounts based on something like this. but it's one more data point that says this market is not a bear market anymore. I don't necessarily agree with that statement. I'm just putting it out there. As long as we continue to have the volatility that we have, I'm going to consider this a bearish market. And there's just too many unknowns. One of them being the Fed, and the other one being the market ignoring the Fed, or flat out saying the Fed is lying. So right now we are above the 10-day, but we are very, very close to it. We're going to be looking today to see if we expand away from that 10-day moving average. We can see we have not crossed below the 10-day yet. This says we haven't even hit it yet either, but when we get really close, we don't necessarily have to hit it. If you look at the way price responds around the 10-day moving average, where we go in like a sine wave, above it, below it, above it, below it, and it's just this rolling wave. Well, we made our move in that wave up through the 10, where we topped out about 2.5%, and now we've brought the wave back down again, and we're at that 10. Now, it doesn't have to make the lower end of this wave, right? I know that that's generally what we get, but it doesn't have to. All right, so when we get down to this bottom, it can absolutely just turn around, bounce on the 10, and run right back up again. In a bullish market, that's exactly what we would expect. In a trending market, that's what we would expect. But we're not trending. We've been sideways for 2 weeks. That's been enough time for the 10 to come up to us, because we didn't go down to it. And having the 10 come up to us feels more bullish than going down and meeting the 10. I mentioned this the other day, but we don't have enough time. We don't have enough wedge left to reject off of this high, come down and tag the bottom, and then run back up and break out. When it comes to these wedges, we don't get to the end of the wedge, right? Price rarely ever comes in to the very peak, right? To this apex. Generally, it leaves 30% untouched, 25, 35. It just doesn't get into this zone. So if we reject here and we get an inside week breakout, start making this move down, there's just not enough room left time-wise to make that cycle and get a breakout. So we have to get this breakout. Now, having said that, this wedge, isn't going to control the entirety of the market. We're just looking at what's the probabilities. So suppose we do get this inside week breakout. That does not necessarily imply that we're going to break down here. We could stop halfway through, turn around and run right back up. We could wick out or even break out from this zone, say challenge these highs, 42.75, maybe 4,300, and get rejected. That would break the entire pattern, right? We'd be done with the pattern at that point. Or we could run down and wick out or break out down here, and still stall along these lows where all these buyers were. Right, we see all that defense down here. And that would break the pattern. And then we could come right back in the box again. So the pattern is not destiny. It's just an eyeball for probability. But it is the number one thing that we're focused on right now, is how this pattern is going to play out and how much time left before there's just not enough room. All right, so 4,100 is the floor, and it's really solid. Getting through that is going to be really difficult until we actually get through it. I'm not going to get bearish. So we're going to have to get through that and then close below it with a good solid close. We're not talking about, barely wicking through and getting a close. I want a definitive leg down, maybe even a gap down and a close near the low of the days, that kind of thing. Otherwise, you got to keep the bearish posture until we get up here and deal with some of this liquidity around 4,200. All right, the KWEB constituents are up this morning. So those China ADRs, got a nice gap up in BABA. Now this gap up, just to keep it into perspective, is still inside day. So we don't have a play unless this can break down below yesterday's low, or we can run up and break out and try to close that gap, which would be hitting $100. Really nothing good out of Baidu. PDD's got that gap up, but giving it back. JD, the exact same setup. And Neo, same thing. They all have that big red candle, and they're all showing that gap up, but still within that candle. So the China names being up, the KWEB being up, it's not offering us anything good if we're going to stay inside that big candle move from yesterday. Bitcoin is also up, and it's been in the news a lot, right? Because they're getting a lot of flows and pushing against that 30K level. There was an article that I was reading. I'm pretty sure it was on Bloomberg, but if I got that wrong, it could be Reuters or Wall Street Journal. It was one of those legacy news sites. that the money flows that were coming in, and I don't know exactly how they would be able to say this definitively, it's not new money. It's existing current trades or traders increasing their position size rather than seeing new traders come in and trading into it. So, we had this cluster here. It's kind of like what the market is doing now in the S&P, with this range bound market that was just biding its time and building energy until we finally got the move and we broke out of it. Now we've got this little bull pennant and everybody's looking for a follow through. If we consider Bitcoin to be a liquidity tell for risk on and market animal spirits, take your pick of whatever kind of language you want to use there, this is bullish for the market, not just for Bitcoin itself. It implies this hunger for risk. And when we see that, we start to see, low float names, short covering, and just an overall more broad bullish bent. Semiconductors, big tech. The worry here, or the concern, is small caps have been doing a lot of moving around. What's this going to do to the impact on small caps? And I don't have an answer to that, by the way. It would just be something that I'm focused on. And if we reject here and can't say get above that 3100, this won't hold this level, right? It's going to have to go somewhere. So if we don't get that break above 3100, we're going to look to break that quarterly level that I have marked, 29220, and then get back in the box. That's a nice monthly candle breakout so far. I mean, that's just looking really good on the monthly. But we are coming into a significant level of resistance, 31,770. Emerging markets are also up this morning, which kind of goes in with that China theme. So we're going to expect to see more of the Bitcoin proxies doing well this morning. Still dealing with that delayed data. That's frustrating. Might move this list over to, say, TradingView. That way we can at least get live pre-market data. Or I go in and figure out what's up. So a lot of these don't have good options, and a number of these don't even have good volume in their shares. So you got to kind of approach, a number of these with caution. But there are some big semiconductor names in there. And we're basically flat in the semiconductors. We're looking at Nvidia here, some pre-market activity, kind of down on the lows. We're down a little bit, but not enough to really be concerned. And we did break, this pretty strong low at 264. It's going to become a big deal. Today's the day it needs to get this resolved, right? And everybody's been looking to short this sucker since it had that really big move, back around the early part of March. And it was before its earnings, right? That big move that came, I guess it was still in February when that move came. Everybody's been looking to short this sucker since then, but it's been so connected with, AI news, and they've been doing, investor events and really hyping it up, that it's held these highs really nice. But at some point, everything that goes up must come down. And today we've broke this structural level, but we still have one more to go, right? So 258.5 would be a good price target if you're looking to short it for like a very short duration trade. That'd be a good place to start. But a solid breakdown below 258.5 would look for us to get back into this box around 242. So let's get down into this line first, this 258.5, and resolve that. That's a short-term trade, say for this Friday, even for today, depending on how things, go at PPI this morning. But bigger picture, more of a swing trade using, say, May or June's contracts. Aim for the red box after we get below 258.5. The thing is, when we come over to the weekly, that still looks very bullish. And the pullback that we're looking at here, that's not enough of a pullback to have killed this trend. It's just a good, clean, healthy pullback in a market that's bullish. So, if we're talking about shorting this thing, approach with caution, because on the higher time frame, it's still bullish. When we open up today in a lot of names, we're going to be IX10. We're going to be inside day for the third day. And in the mega cap names, that's just about as much as you're going to get. Right? We're going to be looking for this breakout. One thing you can do with an IX10 is you can measure the range. So an upside move, if we were to run up to the top of this box and break out and actually get out of this I extend, this wedge or this rectangle that we're in, 100% of the move puts us up near the top of this really big green bar from April 6th, 290 and call it 290 and a quarter. To the downside, that would be 277 and a quarter. So one pivot at a time, considering where we're at this morning in the pre-market, we've got Tuesday, April 11th, the close of that, and then the low of that. Then we'll focus on this gap that needs to be filled at 280 and a half. But with all of the market range bound the way that it is, we really want to focus on getting out of that box first. And as long as we're staying in the box, there's no reason to try to trade directionally anywhere, right? Just like I started today talking about Spot Gamma's write up and their suggestion that there's just no momentum out there in the options, and that sentiment aside, we have no expectation of a market doing anything more than chopping about until at least OPEX. Now, we had a really good move in Amazon yesterday. Looking for this to gap down and then rally back up, right? And this morning, looking at that orange line, we are at the low of yesterday. So I'd like to see it get a little bit lower, open, gapped down, maybe sink even just a little bit more, get around that $97 level, a nice round dollar number, hit support and rally back up. $95.75 is a pretty big deal. So looking at anything short today on Amazon, if we get below 97, then 95.75 would be a good place to target. Kind of puts that box into perspective here on the hourly. We're just looking to get back down to the bottom of this box. But again, just keep in mind, you're not going to really get much out of the market till we can get the indexes moving. Which means we got to get out of this box. right? That's a little bit of a falling wedge. Falling wedges break to the upside. It's a little bit concerning that we did get below the 50% mark on this last leg up. But with PPI coming out in about 7 minutes, it's going to take precedent over any pattern that we have, right? No pattern, no setup, no pivot point is going to stop price when it's an economic event coming in pushing us. So stand aside for that, let it come through, and look for a real solid breakdown outside of that level. 4,100 is the line in the sand, and the expectation really is that we're not going to break down out of it. So if we get down to it, it's going to be a nice reversal, right? That would be the first bet, would be a reversal. We can wick through it, stabilize around it, and then come right back up again. Even a breakout, a good solid breakout, didn't stick to the upside, right? So for the day, we got to at least get out of the box. Say let's use yesterday for an example of this real quick. So when we topped out yesterday after 1 o'clock, we kind of had this idea that, all right, for the hour at least, that was it. We weren't going to go back above it. And when we started to fall out of it, heading to the downside, the expectation was it was supposed to stop around 41.40. When it punched right through that thing like it wasn't even there, then we had every expectation that we were going to keep on going to the next level, because it was supposed to stabilize here and at least pause a little bit, and it didn't. I mean, it picked up speed. So it kind of gave us the nod that we were going to go ahead and go to the next pivot. So if we break down below that 4,100 today, like we did here, and we did back here, just getting down there isn't enough. We need a good solid close, and then a new candle open and a definitive push below the last low of the candle that was set to get there. Watch for a bear trap. They're going to have to convince people that we're not going to bounce, so that people will short it, and then they can bounce the market and squeeze those shorts. So if we get down there and it tries to rally back up, but the liquidity is still not representing those shorts getting squeezed, we're very likely going to retest that low and convince those bears, so that people pile in and get short. We don't have a rally based drop on this time frame, so we'd have to look up the curve, find something not as fresh, and then build our rally base drop in that area, right? Or drop base drop. PPI in 4 minutes. Everybody be careful, be safe, have a good day. Wait for the inside day breakout across the board in just about everything that's good. We're range bound, right? We're inside yesterday's candle. Get out of that, you should have a good play. I'll see y'all tomorrow.